basically two scenarios in this market. You can either short sale or foreclose. And the theory that's floated amongst our communities right now is that if you do a short sale, it only affects you for 3 years, where if you do a foreclosure, that it's going to affect you for 7 years. And affecting meaning the ability to come back in and repurchase. But here's the biggest myth. There is no such thing as a short sale credit rating. It just doesn't exist. So when you hear this 3-year and 7-year distinction that's being promoted out there amongst the realtors, that's Fannie Mae, Freddie Mac underwriting guidelines. From a credit reporting standpoint, anything less than a paid as agreed loan is considered a defaulted loan, and you're knocked out of the market for 7 years.
So it's the same thing.
It's the same thing.
To the credit bureaus, a short sale, right? And in a foreclosure,
there's no difference.
There's no difference.
There's no difference.
Wow.
Yeah. So that's the first myth that we like to explain to people. And again, we want to bring it back to, the 3-year and 7-year, that's lending criteria. So to take somebody who's used to making, house payments, paying real estate taxes, the gardener, a pool service, basically keeping the community and the economy floating forward, they're taken out of this market for the next 7 years. So what we've been able to do at our firm is we've developed what's called a judicial expungement, where we've researched the laws, and there are applicable laws that any of these homeowners can do. And there is a condition under RESPA, Real Estate Settlement Practices Act, Title VI, that requires that the mortgage information has to be reported accurately. And we know that 95% of the cases with loans being bought and sold and transferred, it's impossible to report the information correctly. So we encourage our clients, contact your bank, get a copy of your loan docs or read from a credit report, identify the inaccuracies, and go back to the bank and request formally that they change the information to an accurate status. Now, the banks aren't going to respond to that because they don't know how, they're confused, whatever it is, there's so much activity going on. So after you've made that second request, that consumer is allowed to go back in, small claims court, file a small claims action against the bank, not seek any monetary damages. Okay?
Just a correction.
Just to correct the information. Well, because you can't just change the one component, what happens is the request is to remove all the negative information from the loan. The judge executes that judgment because it's what's called a non-defensible position. The evidence and everything of the inaccuracies are right in front of you, so the judge issues the order. Now, what's significant about that judge's order, you now have a judge's order in hand that says that the information's inaccurate. You take that judge's order, and not only do you submit to TransUnion, Equifax, and Experian, where it removes all the negative information and restores your credit back to the original condition, but there are other data furnishers that specifically furnish short sale and foreclosure information, again, knocking you out of the market. So you're able to take that same court document, submit it to the other data furnishers, it removes it from the other databases, and you're able to come back in and repurchase. So what was $400,000 3 years ago, you're going to come back in and purchase now at $215,000. What was a 6.5% interest, you're now going to come back in and get a 4.5% interest loan.